Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome and welcome back KS family. Please note I don't have WhatsApp or Telegram. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. If you would like daily updates on crypto and stock market price movements, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the tax software I use and links to the CryptoTradingKS Masterclass. Please seek out a CTKS ambassador to get 80% off, and you can also apply for the CTKS Masterclass partial scholarship. Let's run the numbers. Bitcoin is currently up 0.13% to 19,304. Ethereum is down 0.54% to 1313. As crypto technical analysts, we have a very scientific methodology through which we look at the crypto and stock markets. The first thing we do is to mark up our charts with the CTKS method. Then we look outside the charts, checking world events and collecting probabilities. Then we hop back inside the crypto market, knowing that opportunities reset daily, and we seek to find the market's focus. But before we actually buy or sell, and there's a lot of ways to do so, we must master emotional control. We have to kick the dictator of fear out of our minds. As crypto technical analysts, we use three-dimensional thinking. We think, what strategy will we employ if the market goes down, goes flat, or goes up? We have three strategies, not one. And then we consider the predominant probability of what we feel will happen in the markets based on our synchronization. If we got the Midas touch, if we're predicting markets quite well, that's a good thing. You want to be in sync with the market. And then we just have these three parts to our code, these three letters and the numbers there. It's what is the percentage? The price will move against me, go neutral, or go flat, or go for me, go positive, go up. The thing is that we consider the against case first, because we want to make ourselves aware of where price might go that we don't want it to go. And then lastly, it's all about how synchronized we feel with the market. Trading and investing is a skill, and if we're not synchronized in with the market, we shouldn't be scaling our positions. If we're feeling desynchronized, it's advisable to descale. There's always two ways to make money: to avoid losses or make profits. You control the trade or investment, but the market controls the return. The market doesn't know us personally, but it knows the amount of knowledge and active learning we have. Just like in life, the harder you work, the luckier you get. These are really turbulent times we find ourselves in, and in zones 1 and 2, and these are the 4 stages that every single investor and trader progresses through to become consistently profitable. But in zone 1 and zone 2, fear is the CEO of a person's life. Fear brings a lot of negative behaviors, such as entitlement. And entitlement is, I need to buy the bottom and sell the absolute top. I need to buy absolute bottom and sell absolute top. Professionals down in zone 3 and zone 4 don't think this way. Zones 3 and zones 4 have a courage mentality. If something doesn't work, you just get back and do it again and do it again and do it again until it works. But you always manage your risk. And that's why our global family focuses on positive excellence. This is all about putting in the hard work. A lot of people, there's a bit of an old joke. Confucius said, the man who waits for the roast duck to fly into their open mouth must wait a very, very long time. Success is not like that. You have to put in the hard work. If you don't put in the hard work, you cannot be successful. You can be lucky and get successful, but it's always short term. You have to work really hard to keep it. In zones 1 and zones 2, people want everything free. It's kind of like a badge of honor. Hey, guess what? I got this free. In zones 3 and zones 4, people don't want anything free. They realize unearned is returned. If you ask the average person, the average successful person, how they became successful, they will say a ton of work. And it takes a lot of courage and a lot of faith to put in the hard work before you get the results. But that's what Zone 3 and Zone 4 is all about. And if you think of anything that you become successful at, you'll probably think back on those times and say, how did I become successful at this? It could be tennis, it could be basketball, it could be some sort of other hobby, it could be academic studies, it could be so many different things, it could be work. How did you become successful? You put in the hard work. There's no shortcut to success. And when we look at global markets like this, they're all selling down. Of course, there's a lot of negative news in the press and media just supporting what current price action is doing. As an investor and as a trader, and we know all investors become traders anytime they buy or sell, it's important to have the right mental outlook. Without that, you'll buy and sell at the wrong times because fear will be in control of your purchasing and selling decisions. And when we look at recent price action, we can see that in the S&P 500, we've made a lower low. And when we look at the 9 sell-offs and recoveries in the S&P 500 since 1966, mapped to that current price, we can see that it doesn't look really good, but it also doesn't mean it's coming down, like the subprime mortgage crisis, the great financial crisis, or GFC, global financial crisis. We're in a midterm election year, and we have the September effect and the October effect. Those effects are pretty nasty. We see a lot of downward price momentum. But looking at the S&P 500 midterm election year seasonal pattern since 1946, we often see that there's a rally from late October into the end of the year. Just something to keep in mind. There are a lot of members from the FOMC speaking next week, so we expect a lot of volatility inside the markets. One particularly problematic thing that we saw in last week is core PCE price index actually increased. And we're getting a raft of economic and statistical data that's pointing to lower consumer sentiment. And that's why we're seeing a lot of negative news headlines. What the Fed desperately wants to do is destroy demand, and that's not what we're seeing in the economy. We're seeing pretty much the exact opposite. Every month I post a new video on the buymeacoffee.com/CryptoTradingKS website, and this particular month I'm going to do a very interesting one on Russian gas. If you understand Russian gas, you'll understand so many things. And I would like to thank Boris for your kind comment, and Vicente. Thanks so much, my friends. It's just my way of showing my appreciation to the people who reach out and buy me a coffee. Thanks so much, everyone. And you'll find the new video under the post section. That will be coming out later in this week. It's going to be a great one, and it will explain so many things at such a deep level. The DXY is not active on the weekends. It only trades 24/5. How slack for foreign exchange. You should be like crypto, 24/7. Much, much better. Okay, what do we see with the DXY? It's starting to get above resistance. This could point to the DXY starting to challenge the 112.731 mark and the 113.861. If we get a breakdown, we would expect the DXY to head towards 110.913 and possibly lower to 110.187. And when we look at the NASDAQ, this white line, and Bitcoin, this blue line, we can see that the NASDAQ has lost a level of support. When actual asset classes lose their support, it doesn't mean that that's very positive. In fact, it means the opposite. So you just got to be aware of that. But of course, all price moves in a wave, and that's that wave movement that actually throws so many people around inside the market. It doesn't move straight up and it doesn't move straight down. It's always moving in a wave. Price moves in waves is rule 4. It's also important to contextualize the markets. Fear is still increasing. The Nasdaq 100 is still under resistance and has been rejected from that. Bonds and yields, we can see a bit of a downturn in yields, but they're starting to come up. Bond prices just bottomed a little bit, starting to recover, but it's still under a ton of resistance. And when we look at gold, gold is being rejected, still pretty much under resistance as well. And the dollar may be starting to turn around, just like in the chart I showed you recently. Oil is still under pressure, and junk bonds are signifying that there's a lot of fear inside the markets. And we can see the put-call ratio is also increasing. So we've got a lot of fear inside the market in that way. The markets are full of fear, but fear hasn't taken off like it's done in previous downturns. One thing to note, if we look at the VIX, and the VIX is the fear gauge of the S&P 500, generally when you have a spike up to around this 34 level, it's generally one heck of a spike that brings it up like this, kind of exponential price action. You're not seeing this at the moment. You're seeing a steady increase in fear. That's actually not the best. The VIX is known for its explosive behavior. When you get into very considered and slow behavior, you've got to start scratching your head and saying, what's wrong with the VIX? If the VIX starts to collapse down, we could get an almighty rally, and that will be fantastic. But if the VIX spikes up, we could get a very nasty sell-off. When we look back to the C19 sell-off, we can see the VIX is pretty much at the level just before things sold down. I'll just zoom in here a little bit. You can see that level is currently putting us at around the 27th of February 2020. The concept is that we had a big jump in the VIX. There was so much fear. We're not seeing that right now. We've seen a steady increase in fear, almost behaving like a stock. It's very, very weird for the VIX to behave this way. And the jump in the VIX always means a kind of a panic, either to the negative side or to the positive side. You can get jumps down in the VIX as well. But it's the upside jumps that we're really, really interested in, because there's just so much fear in the market in these particular cases. And what we saw when we reached this 27th of February 2020 mark, the markets still came up a little bit and then just sold off. They went straight down the wall. One thing that I've noticed in the markets, we haven't had widespread capitulation yet. This is a capitulation spike. And when we overlay the Nasdaq 100, we can see a pretty much different kind of concept. We can see that the Nasdaq came down quite slowly, but Bitcoin just fell like a brick. And this is why you need to be really careful of Armageddon lines, where you actually cross under a support level. When you cross under a support level, you may get a retest like what we saw here on the way down, but they can be very, very scary. They're times not to be in the market. Remember, there's two ways to make money. One is to make profit and one is to avoid losses. You should use that as a dual strategy. And when we look at Bitcoin at the moment, it's very close to losing its support as well. This is something you must bear in mind. If we lose support in any particular asset class, it means more negative price momentum is on the way. And when we look at the 4 EMAs, and you'll get the 4 EMAs indicator in TM6, you can see that the 200 period moving average of the VIX is currently acting as support, and the 100 and the 50 and the 20 is just spiking up. This is generally not such a good thing. If we look at the smart money buy and sell levels inside Bitcoin at the moment, we can see that Bitcoin is currently trading at 19,311. we have two areas of resistance, 19,910 and 19,985, a higher level of resistance at 20,932. We've seen that the support levels below are actually moving down at the moment. We have our Armageddon line. This has been very, very well defended in Bitcoin, and thank goodness for that. But we can see, looking at the VIX, and that's why I brought up the VIX analysis, even if the Armageddon line is well defended, if it's getting cracked, we could see a really steep sell-off. You must be careful around these times. This is not a time for buying the dip because it could get a lot dippier. And when I say that, we're always borsogging as a community, so we buy on red, but we must be sensible with our positioning sizes. Don't go all in and more. We can see some support levels, 17,831, 17,682, 17,584 and 17,562. This brings a really interesting conversation to light. How low could things go if we get a violation of the Armageddon line and a cascading liquidation of longs? Morgan Stanley did some really interesting work on trying to predict the bear market range for capitulation. What I'd like to show you now is the S&P 500. You can see with the dynamic daily smart money buy and sell levels, we've got so many Stanfield levels above the current price. This means that we've lost support, and this is what caused that big move down, basically to another SL at 35.83. But how bad could it actually get? If we follow the Morgan Stanley route, what they think is that price will actually come down to between 3,000 and 3,400, and they believe that will play out over quite a period of time. I'll just zoom out here a little bit to give you a better picture. They're anticipating in towards potentially the first quarter of next year. It doesn't mean that this is where price could go, but it could, because we're so far beyond or below this support. This was very, very important structural support within the S&P 500, and we're underneath it. Does it mean that we can't come back up and retest this support and resume down? Absolutely. Does it mean we can't come up, retest this support, and then retest this resistance and then turn it into support and then to keep on going? Absolutely, that can happen too. That's why we must keep a very, very open mind. Let price guide you. One thing that institutions are really, really good at is pulling all the players into the market with a specific narrative. That narrative can be everything is going to hell in a handbasket, so expect 3,000 levels in the S&P 500, for example. And then what happens? All the retail crowd jumps in and starts shorting everything. And remember, there's unlimited risk when you short. And then what do? They sharply reverse price, liquidating all the shorts and creating a cascading impact, a short squeeze that pushes price up. Please just be aware of these things. Very seasoned traders and investors know this is a very dangerous time to be in the markets. That doesn't mean we run away from the markets. We're just waiting for the right signal to be sent, and then we're going for it. Professional traders and investors understand the critical role percentages play. Say, for example, we were to fall down to the Morgan Stanley 3,000 mark. That's about 16.35% away from the current price. And then say we were to rally up around, for example, the near 4,000 mark, which could be very, very reasonable in terms of a retracement towards this level of resistance. It's actually under that. But say we were to do that, we go down 16.35% and up 31.33%. These are the times that you really, really make you make a ton of money during these turbulent times. When everybody is running away, that's when you want to be on the dance floor, but do it intelligently. Now, what would happen if the stock market sold down like that? Because, of course, we know that Bitcoin cannot escape the stock market's gravity. In fact, it's rule 225. If we actually had a sell-off as Morgan Stanley predicts between that 3,400 and 3,000 mark, what actually will happen is that we will see if prices play out comparatively to what they've been doing, if normal price behavior continues to occur and the relativities between the S&P 500 and Bitcoin continue to play out, we would see Bitcoin coming down to 15,860 to 11,313, something within this range. About 11,300 to 15,900, you can say, as a rough ballpark. What would happen percentage-wise if we fell down to that lower boundary of 11,313 in Bitcoin? We'd come down 41.39%. But what if we then recovered just to the current price? That would be a 70.79% increase in price. You can see that these percentages really work in your advantage if you can master fear. And that's one thing that we talk a lot about inside the CryptoTradingKS Masterclass. It's so important for you to master your fear. We know Bitcoin cannot escape the stock market's gravity, so if we go back to the S&P 500, we wouldn't be anticipating a return just to the current price. We would be anticipating a return back to around this level overlaid on Bitcoin. So where could that be? That would conservatively place Bitcoin's price around 21,787, so a 41.39% decrease, but a 92.58% increase. This is why I say be careful of the Armageddon line. If we get a cascading of long liquidations, it will cause a move like this. You don't want to be caught in something like this. You want to be caught when it's actually starting to turn around. You need to be careful at times of market structural uncertainty. And of course, that doesn't mean that there are not a truckload of opportunities in other cryptos. As crypto technical analysts, we seek to be on the right side of the percentage, and you can see what that actually means. That's rule 359. One thing that we need to understand are the relative movements between the shorts and the longs. The shorts have been covering their positions and the longs have been buying the dip. As we're in weekend trading, we expect liquidations to be really low, and they are. They're incredibly low, $29.26 million across 14,574 positions. And when we look at total liquidations across the past 24 hours, there's been about 69% long. What about the past 12 hours? Yeah, still 69% long. What about the past 4 hours? Whoa, it's gone the other way, 55% short. And what about the past hour? It's actually reversed, 54% long. You can see there's a lot of volatility in this market, but the trading volumes are very, very low, but the longs are getting whacked. We know from Rule 45, no alt can escape Bitcoin's gravity. So when looking at total global crypto market cap, we can see what Bitcoin has been doing. It's been going down because the whole market has decreased 0.61% to $935.58 billion. The greatest gainers over the past 24 hours, reserve rights up in front nearly up 16%, Lunacy nearly 10% up, Stellar nearly a little over 6%, EOS nearly 3% up, Ton nearly just a little bit over 2% up, and IOTA around 2% up as well. The greatest losers over the past 24 hours, PancakeSwap down 4.74%, Helium down about 4.5%, Monero XMR down about 4.4%, LDO down 4.35%, and Quant down by 3.3%. We know that the gravitational force of Bitcoin is very strong, and when we look on a 5-minute chart, this just gives you an idea of how strong gravitational pull is with Bitcoin and towards the other alts. We can see with Ethereum, as Bitcoin came up, Ethereum really came up, but as Bitcoin came down, Ethereum was pulled down with it. We can see somewhat of a degree of strength in Ethereum, but now it's synchronizing in with Bitcoin. Binance Coin showing a degree of positive variation. This is really good because when BNB goes up, it's most likely that people are coming in to buy the dip. So it's good to keep your eye on that. ADA basically just following Bitcoin's gravity. XRP much, much stronger than Bitcoin's gravity at the moment. Go XRP, go Ripple again. And we can see Solana just coinciding with Bitcoin's gravity, now a little bit weaker. Something's happened to Solana. And what is that? Oh, not again. Solana sold down 4% as it suffers another outage. Oh no, Solana. Actually, Solana was offline for 6 hours. And this marks the 8th time that the network has gone down since its launch. A Solana validator stated that the recent downtime was caused by a misconfigured node that caused an unrecoverable network partition that resulted in the propagation of an invalid block. Basically, the problem created a wrong fork, and that's where Solana validators got stuck. And the problem was mitigated after 80% of Solana validators restarted the network. And we're seeing a bit of a pattern. Watch Solana on the 1st of each month. April 1st, May 1st, June 1st, July 1st, and now October 1st. What's it got to do with the 1st? Solana, what's happening? As a community, one thing we're famous for is our research. When we see stats on outages, we get really, really interested and seek to dig up the source material. I really like to validate statistics, so when we go to status.solana.com, we can see some really interesting things, and if you click on View Historical Uptime, you'll get this page. Notice this is the mainnet beta cluster. You've got so many other things to look through, test nets and a variety of different things, but what they're talking about is mainnet beta. And I've done the hard work for you. Actually, there's been 16 outages on mainnet beta, which came online on the 17th of March 2021. There were 3 outages in September, the 2nd of September, the 14th and the 15th. And we were looking at quite a few hours of downtime. On around the 6th of January, there were outages from the 6th, the 7th, the 8th, the 9th, the 10th, the 11th, the 12th, 21st and 22nd. Some of these 16 hours, 10 hours, 8 hours, 18 hours, 12 hours, 17 hours. There was quite a lot of outages. And then on the 30th of April, there was a 2-hour, 42-minute outage. On the 1st of May, 5 hours, 31 minutes. On the 1st of June, there was a 4-hour, 10-minute outage. And on the 1st of October, 6 hours, 19 minutes. There's actually been a total of 16 outages. And when we look at the first, that pattern actually does not hold true. This is the kind of analysis we do each and every day. We don't care what other people say. We're just really interested in what the facts actually are. For example, when we analyzed the Fed speakers and all of their recommendations, we knew that 100 basis point increase was coming. It would be statistically probable, and that's just based on the understanding of the words. Around that time, it was thought to be impossible. 50 was the absolute ceiling. Since then, we've seen 75 basis points time and time again. This is why, if you dig down to the source data, you're going to find some really interesting things. One thing, a lot of Solana holders will have the question, what will happen next? What has happened, for example, since outages have occurred? Has that disproportionately changed Bitcoin's gravity? When we look at Bitcoin's gravity, we can see Solana is still following Bitcoin's gravity with the first 3 outages. What about this massive outages that occurred pretty much all through January? What happened there? Did it depart from Bitcoin's gravity? No, it just followed it. It followed it up and it followed it down. So what we can say is these outages don't have much of an effect on Solana's price. And that's quite surprising, because you would have just imagined that an outage would have an impact on the price. But it really doesn't. This sell-off in Solana was not caused by the outage. It was caused by Bitcoin. And when we look at what happened, for example, on the 1st of June 2022, with a 4-hour, 10-minute outage on mainnet beta cluster, we saw that Solana is just following Bitcoin's gravity. When Bitcoin sold down hard, Solana actually sold down less. It was much, much stronger than Bitcoin. So what is likely to happen here for Solana's price? It's likely to be influenced by the directional movement of Bitcoin and not by the outages. This may seem very counterintuitive. You would think that outages would absolutely tank the price, but we can see the facts don't actually bear that out at all. From a long-term perspective, of course, outages are not a good thing, and Solana really needs to stop these outages, which I'm sure they're trying to do everything they can possibly do to stop these outages. But what we actually see from a trading perspective and an investing perspective, Solana remains very, very strong. This is why Rule 45 is so incredibly important to know and also to understand. No alt can escape Bitcoin's gravity. Solana was simply caught in the wake of Bitcoin's gravity. And we know one thing. If we get a violation of this Armageddon line, it comes down, retests and resumes downwards. In Zone 1 and Zone 2, investors and traders say, oh, it cut the Armageddon line and it's above it. Everything is fine. Professionals don't think that way. They understand market structure. If we get cascading long liquidations underneath a no support area, as we could see here, things could turn really, really ugly. But we always bear in mind there are three potential cases for the market to go. They can go against us, sell off. They can go neutral, just flatline, just consolidating, or they can go for us. And we consider all three at the one time. That's the difference between crypto technical analysts and pretty much everyone else. Returning to Solana on the 5-minute, we can see it's just recently kicked up there. Go Solana. Solana is a really strong project. It shouldn't be discounted. And when we look at Doge, Doge is stronger than Bitcoin's gravity at the moment, just coming back into synchronization. DOT is above, showing more strength. And Matic is starting to put in a forward positive price pressure move. It's been a bit of a long episode, this particular one, but I wanted to show you how you can research more deeply into particular news posts. It will come in very, very handy for you. In today's comments, please let me know, what are your thoughts on courage? How do you get there? Moving from fear to courage is an incredibly important thing to do. And there's so much fear inside the main markets and the crypto market at the moment. Knowing how to overcome that fear will be critical for your peace of mind and to reduce stress as well. I hope you're having a great weekend, everyone. And please note, I don't use WhatsApp or Telegram. And thank you very much to our moderators for removing those scammers. And to our beloved community, I appreciate you all so very much. It's so fantastic to share this time together. There are always opportunities in the crypto market. The key is all about finding them, but by keeping your mind open to positive outcomes. That's why we have the CTKS Creed to prime our minds for profitability in the crypto and stock markets. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with BORSOG. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. Blaming is one of the most destructive human emotions that has ever existed, and it's always derived from a fear-based response. Getting rid of any form of blaming language will absolutely catapult your success in life, both from a professional, personal, and financial level. Please consider sharing and liking this video and also subscribing to the channel. We would love to have you as a part of our globally extended KS family. If you have friends or family who could benefit from positive excellence and what we do each and every day, 7 days a week, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. Thank you very much to our moderators for keeping our community safe from scammers. And please note, I don't have WhatsApp or Telegram. And thank you also to the CTKS ambassadors for assisting Masterclass students. And of course, a very big thank you to you for watching and for being part of our global KS family. I'll be reaching out to contact the shortlisted Purpuratum CTKS Partial Masterclass Scholarship Awardee. Please keep your eyes on your email if you've applied for the partial scholarship. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.